So hello guys, welcome back. In this one I'll be showing you how to get these continuation trades based on order flow. So let's get right into it. So first thing we need to understand is how to mark these continuation levels, then where to actually enter and what should be the target. So as I said, first of all, the continuation levels. Let me remove everything. Let's go back to this point. This is the new daily open. Okay, so we have new daily open at this level. This will be daily open. Every time the daily candle closes, we need to understand where the next daily candle is most likely going to be printed. So the wick, which would be manipulation, and then the body, which would be the distribution. Okay, so we're going to enter inside the manipulation and enjoy the profits inside the distribution. Most people are teaching that the market is moving from liquidity like this to liquidity, and that's not correct. I've been trading for over 8 years. I have verified my FX book on my Instagram, so I know what I'm talking about. So first of all, we're going to start on daily. As you can see here, there's a huge bearish candle. And when we have this huge bearish candle, usually the next daily candle will probably create small wick and continue the bearish momentum lower. So now we understand that the next daily candle will most likely create small wick to the upside and continue lower. Now we just need to find the continuation level where the wick is most likely going to be printed, and for that we need to go to low time frame. But let me just show you the example. These continuation trades based on order flow are working the best in trending markets, so that's the reason why I'm mostly trading gold and indices. Okay, so let's go to 1H for example. We have a new daily open, so now we understand that we're going to look for open, step into closest continuation level and go lower. Okay, so let's remove this daily candle. And the easiest way to find these continuation levels, as you can see this last swing high, swing low. So you're going to take the Fibonacci from top to the bottom. And as you can see with this 382 level. Okay, this 382 level should be just confluence to your POI. So I sent to Discord this continuation level. And I said that we're going to open, tap into this level and go lower. Let me just show you the video. As you can see, this is the same level. So let me play it. Open, tap into this level and go lower. Okay, so this is the same exact level. Let's go back to the chart. And as you can see, this 382 level is not lighting up with this POI. And for that reason, I always wait for the last push to be finished. And then you can actually draw the fibs. So let's play the market forward. And as you can see, we pushed to this level. Okay, so let's take the Fibonacci to this low. And now as you can see, we have this beautiful POI lining up with this 382 level. So now the daily candle is basically looking like this. So we created this movement to the downside, and now we have this bullish body to the upside, but we understand that this is most likely just a wick. Okay, so the price will most likely create this wick to the upside into this 382 level, and then the price will flip bearish and continue much higher. So our mission is to find our entry point inside the wick and enjoy distribution, aka body. So let me remove this one. By the way, when it comes to the POI, as you can see with this 1H, buy before sell, and we also have this buy before sell on a hard time frame. So basically when I draw the same price action, the last buy before sell, same thing on this one, buy before sell, and one more time. As you can see, we have the same price action. For some people, this will be the order block. Okay, so order block is basically just buy before sell, or you can call it supply. Then we have break block. Okay, so for some people, this will be break block, and for some people, this will be support and resistance level. So as you can see, all three type of people will be looking for sells from these levels. Okay, so price tap in this order block or supply went lower. Price tap in this break block went lower. Price tap in this support and resistance level and went lower. So it really doesn't matter which one of these you're going to use. We have this last push, 382 level lining up with this POI. So this is beautiful textbook continuation level. So now all you have to do is switch to any time frame from 5 minute to 30 minute. Okay, I recommend these time frames. And right here, you can just basically look for your entry model. Okay, so for most people, this will be market shift. So entry point, stop loss above the high. And if we understand that this is just daily wick and we are expecting bearish body to be printed. So now, as you can see, we have this whole movement to the downside and we can just enjoy these profits because we have these precise continuation levels. So as I said in my previous video, it doesn't matter if you are using, for example, like CISD, if you are using market shift or some type of IFVGs, because all these entry models are based on the same thing and it's basically just rebranded. So it really doesn't matter which one of these entry models you're going to use, because entry model will not make you profitable. Understanding how the market actually moves based on candles, continuation levels is the actual game changer and not some type of entry model. I see people posting on Instagram like, all you need is liquidity sweep, CISD, FVG, and that will make you profitable. Like, come on, bro, that makes no sense. So first of all, you need to understand how the market actually moves. Market doesn't care about liquidity sweeps. It only cares about momentum, continuation levels, and candle printing. Okay, so super simple, just 3 steps. So this is just example of the 5-minute entry model. And as you can see, it's happened to level and went lower. Me personally, I do not use 5-minute. I use a hard time frame. With the 5-minute, you'll have much more risk to reward, but the win rate will be a bit lower. And for example, if you're using liquidity inducement model, so this will be fake BOS, inducement, sell, boom, super simple. So as I said, it doesn't matter which one of these entry models you're going to use, because all we care about is understanding where the market is going, and then we're trying to catch the continuation level. So this was just first day. Now let's go to Friday. As you can see, this new daily open on a Friday, but there's no 3/8 level. So in this case, we're just going to go to a hard time frame, for example, like 4H. And on the 4H, as you can see, this is the last buy before sell. And as I said in a previous example, we're going to mark the same level like this. So this is the last 4H. Buy before sell, and as you can see, the level is huge, so we do not want to have levels like this. So for that, we're going to use this tool on the left. Okay, so start of the push, so this is the 4H level, and we're going to put it all the way towards this last candle in the range. Okay, so the 4H buy before sell started in this level. The last candle was this one, so from this level to this level, and as you can see, this is the continuation level, much more refined. So instead of this whole 4H level, we just have this small precise continuation level, wait for price to open, tap into this level and go lower, and it's exactly what I sent to Discord. So now we can just remove this zone, this 4H buy before sell, and we have this continuation level like this, same thing as this one before. So now all we have to do is wait for price to create wick into this level and continue much lower. So let's go back to like 50-minute. And as you can see, we tap into the continuation level. Not yet. We just fake in early sellers. Now we just type in the continuation level. This will be my entry point. By the way, if you go to 1H, we swept this low on the left. So a lot of people will be looking for buys from these levels. Okay, so let's go to 5-minute. As you can see, we have this market shift just to induce buyers into the market and continue much lower. So based on my first model, this is my entry point. This is the stop loss. And if I'm expecting bearish body to be printed, because this was just a wick like this, and now I'm expecting daily candle to create bearish body based on previous momentum, this should be my TP at minimum, and the price should actually go much lower. So let's see what's gonna happen. And as you can see, back to back high of the day predicted based on just 3 simple things. So the first thing basically is just momentum, continuation level, then the price going higher to induce buyers just to create daily wick, aka manipulation, and continue lower. Super simple. Hopefully it makes sense. If you got any questions, you can just DM me on Instagram or leave a comment below, and see you next time.